Let's talk about it with Marshall Cohen, Chief Retail Analyst at the NPD Group. Marshall, welcome. Is it so much that the consumers have stopped shopping or spending, or that they are spending on different things, like groceries as opposed to general merchandise, like services, dining out, like other things besides apparel, electronics, and so forth?
So the consumer is certainly being pressed from both sides. You know, most people aren't making more money, but they are spending more money on things like food and beverage, which are having the highest level of increases in prices. While that's abating it somewhat, it's not going to go away. So we're going to continue to see elevated prices in food and beverage. The consumables, things like, consumer packaged goods, just think of paper towels, cleaning supplies, that's pretty level. But what is happening is the products that people are able to buy on discretionary needs, that's where they're pulling back. So if we're spending more on food, we're clearly seeing the impact on discretionary. So think about what happened also in what I call the COVID carryovers. If you upgraded a television, or if you certainly bought, products to make your home look better while you were living in it more during COVID, that upgrade cycle or even the replenishment cycle has now been sped up, and we're going to have to wait a while until those people upgrade as well. So that's why you're seeing a lot of these businesses that are not necessarily full service and full assortment slowing down a little bit. Walmart has a huge advantage, much like the big box retailers do, in the sense that they're selling a wide variety of product. That's why a lot of the future looks bright for them, because they're not pigeonholed into one particular business.
No, they're all over the waterfront there. In something you wrote recently, Marshall, you said that 2023 will mark the return of the store, or the year of the physical store. Certainly Home Depot and, for the most part, Walmart are regarded as leaders in the physical store area. Their numbers weren't all that good. On what do you base your assertion that this is going to be the year of the physical store?
So looking at the fourth quarter and the holiday results, we clearly saw something shift. The 16-year momentum that the online environment had in gains in sales has finally leveled off across almost all of the discretionary categories. And what that means is online is leveling. If we're buying pretty close to the same level of product, we're spending about the same in most industries, maybe a little less here and there. The thing that's happening is online is slowing, but stores are gaining. We're now more social about shopping again. And without the new products that are in the market, there's just this absence of newness. The consumer is going back to stores to kind of figure out, what do I need to buy? A lot of people didn't know what to get for holiday gifts. They had to physically go into the stores to shop to figure it out.